So a week ago, I got the opportunity to tour CleanSpark's Bitcoin mining facility in Norcross, Georgia for the second time ever. I got dinner with Matthew Schultz, who is the executive chairman. I got drinks with Gary Vecchiarelli, who is the CFO of the company. And I have a lot of takeaways that I want to share with you guys in today's video. But I do want to mention I shook like 50 of you guys' hands. I'm assuming all 50 of you are watching this video. And I really felt like a celebrity. I only had to pay for one Lyft ride while I was down there. Other than that, two fellow CleanSpark shareholders and fans of the channel drove me around town, picked me up from my hotel, drove me to the facility, drove me back to the airport. It was just awesome. The CleanSpark community is incredible. All right, hang on. Editor RexFinance coming here. Just hang on. I got to tell you something, okay? All right, really quickly, I posted a vlog of my trip, and I've had really good feedback from it. The catch is it's a members exclusive video because I got to take care of my members, okay? But it's the first link in the description down below. Click that, go join the membership, and you can watch that vlog. I have footage from the repair lab, the technician lab, the 99.9% uptime. The list goes on and on and on. I think you guys are all going to enjoy it. It's well worth the, $5 a month that the minimum fee is to join the membership. So come on, just join. If you don't join, are you really a CleanSpark bull? I don't know. Yeah, without further ado, let's discuss this. So we all know CleanSpark has had really good year-to-date return compared to all the other Bitcoin mining stocks. Year-to-date, it's up 49%, and especially over the past 12 months, it's been incredible, up 313%. But there's kind of a new kid on the block this week in particular. You'll see on this chart here that CleanSpark is no longer the only Bitcoin mining stock that's positive year-to-date. Core Scientific and Iris Energy they've now joined the party, which is awesome. Core Scientific it's made a monster move this week, and it's all based on this news that they're going to provide approximately 200 megawatts of infrastructure to host CoreWeave's high-performance computing, HPC services, capturing significant AI compute opportunity. So actually going into this investor event last week, I think it was on the minds of everybody that was there. Everybody wanted to know. Everybody wanted to ask the management team, okay, all these other companies are getting into HPC AI infrastructure. What are your thoughts on it? And I was actually curious myself because if you followed my channel, you would know that I'm not really on board with HPC and AI infrastructure. And honestly, if CleanSpark came out and said that they were going to transition part of their business model to HPC and AI, I would probably sell my shares. I would, full transparency. That's how much I don't agree with this business transition that a lot of these Bitcoin mining companies are undertaking, but that's a point for another video. My point is, yeah, I'm biased towards CleanSpark, but if they make a business decision that I'm not a fan of, I'm not going to be scared to sell. But I got news that I was very happy to hear. Somebody asked the question in the investor Q&A that they did at their facility, and they basically said that they shared the same thoughts I have about it, that it would only be a distraction, that they believe the best use of power and energy is to mine Bitcoin, and the capex of this HPC AI play just doesn't make a lot of sense for a lot of these companies. There's some questions about the demand behind this. I mean, everybody points to CoreWeave, right? CoreWeave is in the news all over, whether you look on Twitter, whether it's just on Google. CoreWeave, and this huge deal that Core Scientific signed. By the way, I should show you what Core Scientific has done this week. Let me Google Core's stock quick. This week, over the past 5 days, Core Scientific is up 32% and 43% since Monday. So, obviously really good return over the course of, 3 trading days this week alone. But back to the point here. CoreWeave, okay? Everybody points to CoreWeave and they say, well, they're backed by NVIDIA, Rex. They're backed by NVIDIA. So back off, you don't know what you're talking about. Well, let's think about this a little bit more. Why would NVIDIA back a company like CoreWeave? Well, if we think about this, and we can actually dig into NVIDIA's SEC filings and see this, but NVIDIA's customer concentration goes something like this. Microsoft, Meta, Tesla, Google. The list goes on a little bit further, but The bottom line that a lot of people don't understand is all of those companies, they're working on building their own AI chips, which means at some point in the future, NVIDIA's largest customers are probably going to stop ordering AI chips from NVIDIA. Whereas a company like CoreWeave, they're not focused on developing their own AI chips and their own GPUs. So NVIDIA, this, as common business sense would tell you, wants to invest in these companies that are going to be their customers for the long term to ensure that their company is here for a long time and demand for NVIDIA's GPUs stays really, really strong. It makes sense. But NVIDIA does have a bias here to invest in a company like CoreWeave because, again, NVIDIA's core customers, they're going to slowly fall off. And even if they keep ordering GPUs from NVIDIA, it's likely that their orders have peaked in 2024, where some of these companies have spent billions of dollars on NVIDIA GPUs just this year alone, in late 2023 as well. It's very unlikely that that sort of spend is going to continue. So my question remains, if these companies, if the legit companies like Microsoft, Google, Tesla, Meta, these companies are doing it themselves, and they're providing the infrastructure for themselves, and they're building their own AI chips, is there really that good of demand out there for HPC AI infrastructure? And that's question number one. And my answer to that is just based on the clientele I've seen a lot of these companies sign on. These are startup companies with very risky financials, where even CoreWeave, I would say, has a very risky financial profile to it, where all of the debt, all the financing that they've undertaken has been collateralized by NVIDIA GPUs. Well, you might ask, okay, what's the problem with that? Well, the problem is GPUs, by definition, by Jensen Huang's law, who is the CEO of NVIDIA, more than double in performance every 2 years. So what this means is the collateral that a lot of these companies are using loses its value in 24 months. And what's the payoff or the payback period for these GPUs, these NVIDIA GPUs at today's prices of $40,000 per H100 GPU? The payback period is 24 months. So really, there is no time period where if you own NVIDIA GPUs and you lease them out, like CoreWeave does, there's no time period in there where you really actually see the 90% margins hit the bottom line of your company, if that makes sense, because you're constantly repaying either the financing you've done or the purchase of the NVIDIA GPUs. You don't start to truly profit on this business venture until after 24 months on average. It can be different for every single company. But again, that's a problem because every 2 years, if the performance of GPUs more than doubles, you're always going to be chasing after the next GPU. I think NVIDIA's next one's called Blackwell or something. Eventually, demand for the NVIDIA H100 is going to go way down. It's going to drive the cost of it down. But you know what? Every one of these companies is going to be chasing the Blackwell GPU then, because it's the most efficient, highest performance GPU on the market. And in this business, if you don't have the highest performance GPUs that you can lease out to customers, your customers are going to go to somebody that does have that highest performance GPU. So this is a never-ending arms race, very similar to Bitcoin mining, except with AI HPC, you're in an arms race for NVIDIA H100s that lose their value every 2 years, that need renewed or upgraded every 2 or 3 years, versus the Bitcoin mining industry where, okay, you're in an arms race for Bitcoin mining rigs, but usually just based on the halving events, you can get 4 years, usually 5 years, 5 or 6 years, useful life, where Bitcoin mining rigs are profitable on a per unit basis. So this is I struggle to see the appeal of getting into HPC and AI when you're comparing these two arms races. You're either in the arms race for NVIDIA H100s or you're in the arms race for Bitcoin. And if you're a believer in Bitcoin, the upside with Bitcoin that you can hold on your balance sheet is really pretty much uncapped, especially when we consider the government debt that continues to balloon. when we consider how the government continues to spend more and more money, when we consider inflation, when we consider the fact that every single monetary system in history has eventually failed, Bitcoin starts looking pretty dang attractive. And I think it speaks for itself that billionaires, companies, countries, multi-billionaires, trillionaires are getting involved with Bitcoin. I think that speaks for itself. I know I went on a little bit of a tangent here, but I was so happy to hear CleanSpark's management team say HPC AI would be a distraction. They actually went as far as saying their Norcross facility, which is the one I was at, is perhaps the facility, the best facility that is best suited for HPC AI that any of these public Bitcoin mining companies own. And it's because the Norcross facility is in a metropolitan area where latency would not be an issue and there'd be a lot of demand. And this Norcross facility has raised roofs, raised ceilings. They could very easily do HPC AI in this facility. But just based on the management team's comments, I don't think it's going to happen. And I'm happy to hear that. Eventually, CleanSpark will be releasing that Q&A forum that we had at the Norcross facility publicly. They kindly asked me not to share it. Otherwise, I would share you that clip of them talking about HPC and AI. But it largely reflects what I just told you and in my previous comments that I've shared on this YouTube channel. But one last note I do want to make is actually it's actually a good thing for CleanSpark. Like, this HPC AI arms race is a good thing for CleanSpark, even though they have nothing to do with it on paper, right? The reason it's good for a company like CleanSpark, or you can even say Marathon, or you can say Cypher Mining or Bitfarms, is because any attention that is diverted away from these companies' Bitcoin mining operations to another business segment like HPC and AI will serve to rationalize the Bitcoin network hash rate. And I actually have a picture of this, I think right here, where ever since the halving event, the 30-day average of the Bitcoin network hash rate has been declining. This is something that I think will continue for much longer than people expect, because there is this huge rush there's this alternative demand now for data centers with cheap power, right? You have HPC and AI, huge demand for it, whether it's a fad or not. I don't agree with it. Maybe you agree with it. But the bottom line is this actually likely benefits the Bitcoin mining economics. It'll make it more profitable to mine Bitcoin because less attention is being put into Bitcoin mining. More data center capacity is being used for alternative purposes, which means a lot of, there's limited data center capacity, right? So any capacity that's not used for Bitcoin mining will rationalize that network hash rate. And ultimately, what does that do? Well, it will limit the future difficulty increases of mining Bitcoin and likely actually lead to more decreases over time of the difficulty to mine Bitcoin, which you can do the math in your head, makes it much more profitable to mine Bitcoin because you're mining more Bitcoin with the same amount of computational power, right? So it's kind of an interesting thing here where I don't agree with the move at all that a lot of companies are making into HPC and AI, but I'm kind of just sitting back and cheering it on because it's actually a good thing for my company, CleanSpark. I'm all in on CleanSpark. I always have been. I've said in the past I might get into Cypher mining, and if CleanSpark were to get into HPC AI, that's the company I would buy into. Now, this I can show you. This is the presentation they put in front of all of us investors there in Norcross. It breaks down their operations. Their current efficiency is 24.22 joules per terahash. I actually think that's better than that now. In their most recent monthly update, their month-end fleet efficiency was 23 joules per terahash. And if you do an industry average or an industry diagnosis or industry research, this is actually much better than the average, like 30%, 40% better. Probably not 40, 30. I'd say I put it right at 30% better. Just off the top of my head, it's 30% better efficiency than the average Bitcoin mining fleet. That is a huge deal. Okay. They say the realized hash rate. CleanSpark has been on a tear. They're now number 3. And if Core Scientific continues to divert resources away from Bitcoin mining, CleanSpark is going to quickly become number 2. And at some point, I've said it in the past, I would not rule out CleanSpark overtaking Marathon Digital, which would be really interesting. CleanSpark also has the cleanest balance sheet. The company has $1.5 billion of total assets. When I first started investing in CleanSpark, they struggled to do even like $10 million in revenue. It's just crazy how far this company's come since I first started investing in it. They have $680 million of cash in Bitcoin on their balance sheet. We talked about the efficiency. And most importantly, they're very geographically diverse now when it comes to their Bitcoin mining operations in the United States of America. At first, they were solely concentrated in Georgia, which is fine, but you run the risk of a significant storm, for example, wiping out all of your operations. Smartly, CleanSpark has started to diversify geographically to Mississippi and now Wyoming. They announced just recently their Wyoming transaction is going to close in the next couple of days. So very, very exciting. And I would not be surprised. I would not be surprised if CleanSpark continues to diversify away further from the Southeast. Come more to the Midwest. I think they're going to expand a lot in Wyoming because the political environment there is very favorable to Bitcoin mining companies. I would keep an eye out for that. I personally would not be a fan of them diversifying geographically internationally, if that makes sense. I'm not a big fan of that move, but if it would happen, it's not one of those moves that would force me to sell. It's just, I would prefer them to say America's Bitcoin miner, which is their trademark, right? And here is their, quote, clear path for measured growth. This slide means more to CleanSpark investors or potential investors than it does any other Bitcoin mining company who puts out a similar slide, because CleanSpark's been the only company that has built scale, and they've kept their word when building that scale. With their guidance and projections, they have been by far the closest to meeting their projections and guidance out of any of the public Bitcoin mining companies. So investors simply trust the management team, which is a large reason that CleanSpark trades at a premium to these other companies. At the end of 2024, they project they'll reach 32 exahash per second. Currently, they just reached 18 exahash per second. I think I just mentioned that in the recent release as well. Current hash rate of 17.97. Let's call it 18 exahash per second. So they're going to increase that by quite a bit yet before the end of the year. And then by the end of 2025, they expect to be at 50 plus exahash per second. And again, this is a good thing for CleanSpark. If all these other companies start diverting resources away from growing their Bitcoin mining operations, it's going to be even easier for CleanSpark to continue to grow, which is very, very exciting to me. A believer in Bitcoin, right? And in the fact that I believe Bitcoin mining companies, the peer plays, are leveraged plays to the price of Bitcoin. If Bitcoin does well, I expect CleanSpark stock to do even better than that, right? So very exciting stuff. No complaints from me. Now, the next slide that I want to highlight is their track record of pragmatically growing our Bitcoin balance. So you can see back when Bitcoin was at lows, their Bitcoin treasury was also pretty low because they decided to sell all of their Bitcoin. They literally sold their Bitcoin at the top, literally the top. And they got so much grief for it from other Bitcoin mining companies. It's just funny to look back on this. And then all the other Bitcoin mining companies started to follow suit, but a lot later than CleanSpark did. CleanSpark sold in the $60,000 range, whereas these other companies sold at $30,000, $40,000, $20,000. But somehow they've timed this out perfectly again on the way up, where they started to accumulate and hold on to their Bitcoin literally as the price of Bitcoin bottomed. That's when they started to build their Bitcoin treasury back up. I believe a lot of the upside potential with these Bitcoin mining companies comes from the Bitcoin HODL balance that these companies have. I really hope CleanSpark, even through future bear markets, I hope they never completely sell off their treasury again. And it's just because, again, that uncapped potential comes from their treasury balance, in my personal opinion. And if you sell off your Bitcoin, obviously you get rid of that uncapped upside. So would I be upset if they sell portions of their treasury? No. But I really hope they don't sell 100% of their treasury. They talked about this a little bit in the Q&A as well. And they kind of shied away from ever saying they would sell 100% of it again, but they also didn't completely rule it out. So that's interesting to keep in your back pocket as an investor. And actually, I think it's also kind of funny that these companies, they're trying to find ways to diversify their revenue streams away from the unpredictability of Bitcoin. But the revenue streams with these HPC AI customers that are startup companies, venture funded, like if we enter a recession, those revenue streams are going to be just as unpredictable as Bitcoin, right? Because I don't care what contract you signed, there's a chance that these companies will stop paying their bills to you if you're an HPC AI provider. So it's just interesting also that as Bitcoin really matures, I think the volatility of it's going to decrease tremendously as more and more people adopt it, as more and more institutions adopt it, as more and more countries and billionaires and trillionaires adopt it. The overall floor of Bitcoin is just going to go up. I mean, we're well along the learning curve of Bitcoin at this point. In 2022, we had companies go bankrupt because bankers and lenders made really bad deals. You know what? That's a learning experience, and that's never going to happen again. I shouldn't say never, but it's very unlikely to happen again because these lenders and bankers have learned from that experience. They've learned what they can collateralize for people that are seeking loans in this space. They've learned what causes these companies to go bankrupt. That is something that is huge for the price of Bitcoin and when it comes to liquidations of these companies. And I also like this slide a lot where they talk about their all-in power cost per kilowatt hour. A lot of companies out there are not this transparent. They'll give you the wholesale electricity cost, but they don't talk about the transmission and distribution, the profit margin that they give to the city, and they don't talk about the taxes either. This is CleanSpark's average all-in power cost per kilowatt hour, 4.3 cents per kilowatt hour, which is very, very low. I wouldn't say it's not the lowest, right? But it's below average is what I would say, and that's something that you really need to pay attention to because this is one of the variables that definitely impacts the overall profitability of mining Bitcoin, your electricity cost. Anyways, let's start talking about Norcross, Georgia, the site that I visited. I'll throw up a couple of videos that I took while I was there, while I also talk about this slide on the screen here. Overall, believe it or not, Norcross, Georgia, the facility in Norcross, Georgia is actually a pretty small Bitcoin mining site when it comes to overall scale of the company. At Norcross, they only have about half an exahash per second operational. That's pretty small considering the company runs 17.3 exahash per second currently total. So there's only 4,300 machines at Norcross. There's only 17.7 megawatts at Norcross, but this is what I think is very, very interesting. The uptime at Norcross it's incredible. 99.46%. When I was there, it was actually 99.9% uptime. There's so many different appeals to immersion cooling Bitcoin mining, which is what the Norcross site is. They immersion cool their miners at Norcross. There's a lot of skepticism around it, but there's a lot of things that the skeptics don't like to talk about. Like the fact that at Sandersville, which is CleanSpark's largest site right now, they have to have 60 employees on site constantly, 24/7. That's a number I got directly from the management team. 60 employees on site 24/7 at a minimum. Because so many different things can go wrong. Miners go down, fans break, you name it. Whereas at Norcross, there are a single-digit amount of employees there. And it's very rare that a mining rig actually goes down. In fact, at Norcross, they have some of their oldest generation mining rigs up and hashing at this Norcross facility because it just runs. That is a quote from another management team member. The thing about Norcross is it just runs, which is a huge deal. It's a huge deal when you're mining Bitcoin. Any downtime you have is missed revenue opportunity. It's missed profit opportunity for your shareholders that invest in your company. So uptime is a huge deal. When I was there, 99.9% uptime. That is incredible. And then you consider the fact that, so they strip the fans out of these ASIC miners that they're going to submerge into the cooling fluid. So they then can stockpile those fans, and it just so happens that at air-cooled Bitcoin mining facilities, it's the fans that break down most often. So it's just all of these efficiencies that CleanSpark has that I don't know if a lot of the other companies have picked up on yet, where the fans are an example. They repurpose these fans. They strip them out of the miners they're going to submerge in the immersion cooling fluid. They save them in inventory to replace broken fans on the ASIC rigs at the Sandersville site, for example, which is a relatively harsh environment. CleanSpark is also one of the only companies, if not the only company, that has an in-house repair lab. And this is astounding. I heard this from the CFO himself. The repair lab, in the 10 short months they've had it, has saved the company $1.6 million in 10 months. $1.6 million it saved the company. Absolutely incredible. And again, that's $1.6 million that doesn't necessarily show up in the financials, but it's $1.6 million that the company doesn't have to dilute shareholders. It's $1.6 million that the company has saved, and as a result of saving that, it's $1.6 million they haven't had to raise to grow their operations. It's all of these synergies that add up. You consider the concrete that it takes to build an air-cooled site and the lack of concrete it takes to build an immersion-cooled site. And it's just the overall efficiency of the immersion-cooled site is incredible. A good comparison, a lot of people will question the how you cool down miners with immersion cooling and how you just you cool it off. Essentially, you still air cool the fluid, right? Well, the difference is, okay, it's in the heat transfer. So think of when you're about to throw a frozen pizza in the oven, you set your oven to 400 degrees Fahrenheit. You can reach your hands in there and you can feel the warm air. It's going to feel pretty hot on your hands, but you're not going to be burned. Whereas if you are going to make some mac and cheese or some pasta and you boil water on the stovetop, if you boil it at 200 degrees and you stick your hand in the boiling water, you're going to have some third-degree burns. So it's all in the heat transfer, how fluid is much more efficient at transferring heat than air is. And that's something that's somewhat difficult to really put a number on. But when you look at the overall efficiency and the ability of CleanSpark to overclock their miners at this Norcross facility because they're cooled off so efficiently, it really does add up in the end. You can mine more Bitcoin for less computational power. And again, that's something that's hard to measure. And I do think it's quite strange that CleanSpark has not built another immersion cooling plant yet or facility yet, because just based on the way they talk about Norcross and how proud they are of this facility, you'd think that they'd be all in on immersion cooling. I mean, they have Taylor Monig as their chief tech officer, who holds more patents in immersion cooling than anybody else, maybe in the world. And they only have half an exahash dedicated to immersion cooling. So I guess what I'm saying is do not be surprised if they announce some new acquisition in the future or some new build out in the future where they start immersion cooling again. It makes financial sense just based on everything I've seen, everything I've heard from the experts in the space, talking privately with Taylor Monig. I mean, he's a literal genius. Anyways. But yeah, I mean, you don't have to agree with me about HPC and AI. I'm just a bit miffed on it right now. I'm not saying my opinion can't change, but there's just, I don't know, there's a distinct lack of contracts actually being signed, and the contracts that are being signed are from startup venture-backed firms that, you know, if the economy turns over tomorrow, these companies are going to turn over tomorrow. The other thing is I don't really see what AI is today that it wasn't 3 years ago. I mean, we used to call this stuff big data. What has changed in 2024 or in the past 6 months that all of a sudden makes AI this great play that wasn't a great play previously? But yeah, I mean, call me a Bitcoin maxi if you want. That's what I am. I agree with CleanSpark's management team. The best use of power and energy is to mine Bitcoin. I don't think there's a second best. And, again, my opinion on that could change, but it seems like a far cry for me to change my opinion on that. I think Bitcoin is the future. I don't think it'll ever fully replace the US dollar in our lifetimes, but you know what? As the risk of the US dollar and the risk of our monetary system continues to increase over time, it's a matter of fact. It's a matter of time before more and more people continue to buy alternative assets, alternative monetary vehicles like Bitcoin. We've already seen this process start to happen. We're sitting at an all-time high with Bitcoin right now. People are believing in it. And a lot of people struggle to really see the use case of Bitcoin. Why does it have value? Well, I don't have my wallet. I was going to pull out a dollar bill and show you. This is a piece of paper. This is a piece of paper. Why does this piece of paper have value? Your answer would be because people believe it has value. And there's reasons people believe it has value, because it's backed by the government, et cetera, et cetera, et cetera. But all in all, it's just the belief that people have that a dollar is worth a dollar and it's a medium of exchange. It's really not that different than Bitcoin, that if you believe Bitcoin's worth this, that's what it's worth. Oop, I hit my mic. I apologize. But A lot of people can disagree with the price of Bitcoin. Oh, it's just a bubble. Okay, but people are still paying this price for it. And we have 15 years now of history showing Bitcoin absolutely mooning in price because more and more people are adopting Bitcoin. More and more people are believing in Bitcoin. And the more and more people that believe in it, the harder it is to fall, right? And it's really the decentralized nature of Bitcoin that gives people belief that it's worth something. Because people are fed up with the government and the centralized currencies and being able to inflate us to oblivion. The belief that Bitcoin has value comes from the decentralization. That's the paradigm shift we're seeing, where people used to value the centralized nature of our currency, but as we've quickly started to realize through the years, the government is not a good steward of our tax dollars. Oh, well, maybe being decentralized is actually more attractive. More and more people are starting to fall into that camp. Anyways, I don't know. I've went on a little bit of a tangent here. I really hope you guys enjoyed this video. If you're new here, returning, not yet subscribed, please subscribe down below. We still have one of the fastest growing stock market YouTube channels on this platform. I'm eternally grateful for all of you that continue to watch my videos. With that, have a great rest of your day. Stay blessed. Keep 10 toes to the ground and your chin up. Peace out.